Okay, good morning. Today is February 23rd, 2026. It is Monday, new trading week, and we're looking at the E-mini S&P chart and going to break down a little bit of our weekly analysis here. So, first thing, so we note that we took out the monthly lows here from back in December. Also found ourselves just nearly making it to that consequent encroachment of November's monthly wick. On a weekly, not a lot going on here, but we're going to make sure that we can see last week's weekly high and low. Yeah, keep down a 4 point. So there. Next thing that we're looking at is that daily imbalance. Let's lighten this up. So we're currently in that range, in that upper quartile of that weekly imbalance. And as much as we would like to see it run through this and take out the highs, the bias will have to be lower for this week, most definitely, because we see these kind of relative equal lows. But with more information, that's when we will really be looking for the upside. Say we close up above, come down, tap into it. That would make us want to look higher. This is a weekly. And obviously we would want to draw the quadrants on this. But we also need our daily lows from the last 3 days. So we have our current candle 1, 2, 3. So yeah, that's already tapped into. As we go further, we obviously have our daily opening gap. Large 4-hour imbalance, so we could see ourselves get up into here. Definitely, it's not out of the picture at all. See our regular trading hours, that's where these relative equal lows are very apparent. Our daily opening gap is right here, or the new week opening gap, might I say. So we need to make sure we have that on there. We'll look at the quadrants of this as we break further down. We also have this regular trading hours gap right here on the 4-hour. So we want to make sure that's thoroughly noted because it's not exactly apparent on the regular trading hours gap. So yeah, we're keeping that in mind as we continue the analysis. Let's look at the these are kind of like those weekly opening gaps. And dailies. So obviously we had these ones drawn out up here. We're currently in the January 25th, which overlays that daily pretty precisely. But ultimately the bias is lower. Let's go ahead and take everything off of here. Now looking at the NASDAQ, looking a lot weaker than the ES, obviously. So what I'm doing here is I'm toggling between that, the set, using settlement as close on the daily, to kind of see what makes these gaps a lot larger. So for one thing, we can see we have this volume imbalance. We've got a discount wick, which will mark the midpoint on I like to keep that a dashed line. And premium wick, can get that in there too while we have it. So yeah, we'll keep that drawn out. How about our keep this weekly low, weekly high from last week. But again, we look bearish, so we're gonna keep an eye on where we can find that Judas swing higher for the week before we can, look for shorts. So we have our 3-day high and lows. Keep that at a 2. We have this. This is our new week. And last week's new week as well. Which gives us reason to, see consolidation sort of happening at the start of the week. not look nearly as clean on the 4 hour. Let's see if we can polish that up. So we have the regular trading hours right here. And these are just things that I'm noting, as well as that 4 hour. And we can see as we go back to electronic, it isn't really shown there. We're actually in a bearish kind of area here, but we've got the opposing, buy side to sell side, balance price range, but we still come up into that. What I would be marking on that is like this kind of deal. And I'll be removing this kind of from my charts, but just as a visual representation, that's kind of how it's looked at. I don't like looking at a chart that looks like this. It's too much lipstick. Let's look over at the dollar. So since we took out this high and have moved back into the range, we're going to be looking lower. Last week we made the call for higher prices, and it was fairly accurate. Okay, so on the daily we want to be looking at this imbalance. We're including that volume imbalance, but it really should be this entire range, because that is a suspension block. Volume imbalance above and below. Those are our quadrants, and we'll make a specific focus on just this range. But as we come down to the 4 hour, we see break of structure. This is the area where we see that kind of inversion, and we should see some sensitivity. So I'm looking lower, at least for the start of the week on the dollar. But if we come down and just tap this and push it back above the highs, that is, you got to be able to anticipate that. Oil. Oil. I know that I was looking at sort of breaking back down into this area. I think my initial one was actually what we're looking at here. For a buy, I guess we traded into that overnight. A lot of strength here. Let's get rid of this stuff again. What is our weekly? I mean, we could just see oil just tear off, leave kind of that lower gap open down here. But we'll draw it out just as a place marker, because we also have this one that I might just use as means to get out of the range. Is our continuous contract? Yeah. NQ and that volume imbalance, just like right there. Again, giving us means to look higher, but doesn't necessarily have to do so. I still have to put those halted gaps back in. We have 68, 41, 75. We need these massive. And 68.35 even. Make sure we have these locked. I'm not sure why this is showing up here. I think that was a different one that I was marking out. But these are not the correct coordinates. So just giving these relative equal lows, that's why I was looking short. And we have this halted trading hours gap sitting right below it, so that's kind of a reason why we could see a move lower this week. So that's my primary analysis for the beginning of this week, and we'll be back in throughout the week just to check on it, see where things change, just given the price action for a particular day. So I should be back tomorrow, but that is all I have for today. Okay, be safe. God bless.